Welcome back to my channel, ladies and gentlemen. I am so delighted, I'm so happy to welcome you once again to my channel. So in today's video, I am going to be showing you how I made over 500 pips trading gold yesterday. So yesterday was Monday, the 4th of December 2023, and I traded gold using the same strategy that I teach in my premium video, the same strategy that I detailed in my premium video. That is the exact trading strategy that I use to generate over 500 pips while trading gold. And like I said, I love the moving average so much because it gives me a lot of details to what the market is doing, right? When trading the moving average, I don't just focus on only one time frame. I use multiple time frame. I have a major trading time frame, but I have supporting time frame. Like my major trading time frame is the 15-minute time frame as a day trader, but I also add up the 4-hour, the 1-hour, and the 30-minute time frame to give me a clearer direction of where the market is going. Like you all know, during a ranging market, the moving average doesn't work perfectly well because you're gonna get so many whipsaw during a ranging market in your trading time frame, right? So if you focus on just one particular time frame, honestly speaking, during a ranging market, you might end up losing all your profit, and if care is not taken, you might end up losing your account. So the essence of adding multiple time frame to my trading strategy is to understand the directional movement of the market, because you need to know where the market is heading to so that you trade in the direction of the trend. Because we are trend followers, we make sure that we understand the direction of the trend so we follow it very well. But if you focus on just one time frame, honestly speaking, during a ranging market in that time frame, you might get so many whipsaw trading the moving average crossover, and if care is not taken, you might end up blowing your account. So like I always say, do not risk more than 1% of your trading capital. Risk only 1% so that you can survive in the market. There are times that you will lose and there are times that you win. So the sweetest part of it is that your winning rate, right, doesn't matter. Even if you have more losing rate than winning rate, what happens is the ratio, the risk reward ratio, right? Imagine in one trade you make over 500 pips, whereas what you risk is just 20 pips. That means if you lose, you risk only 20 pips. But imagine when you win, you accumulate so many pips. So this is what I teach in my premium video, and I told you that if you finish watching it, make sure you backtest it so that you understand what I'm talking about, right? In my last video, I talked about how I trade gold and I made so many money from it, right? Because on Friday, gold was clearly in an uptrend. On Friday, gold was clearly in an uptrend last week Friday, right? To the extent that gold reached the highest peak. Gold reached the highest peak, the highest resistance level in the monthly time frame, yearly time frame, the highest resistance level. And I made a video and I told you that if care is not taken, gold might surpass 2,100 level before the end of 2023. To my greatest surprise, gold surpassed 2,100 level on Friday night. Can you imagine that? Now, yesterday being Monday, gold was still bullish in the morning, not until when it got to the highest level, then it started to reverse. And like I said, you have to wait for a crossover for you to confirm the change of trend. That is what I normally teach. So what I did is that I waited for a crossover at a 15-minute time frame for me to confirm that the trend have changed, because in the monthly time frame, in the daily time frame, in the weekly time frame, I've already confirmed that gold has reached the highest resistance level, right? And we are waiting for the sellers to push it down. And to my greatest surprise, the sellers step in when gold surpassed 2100 level. Sellers step in and push the price down. So I didn't decide to sell because I wanted to confirm that sellers have taken charge of the market before I sell. And where do I make that confirmation? That is the moving average crossover. I waited for the 5 EMA to cross below the 20 EMA in a 15-minute time frame for me to place my sell trade, and that was what I did. So when it happened, I placed my sell trade and I risked only 20 pips. Guess what? Before the end of the day yesterday, I accumulated over 500 pips in a single day, whereas I risked only 20 pips. So imagine this kind of simple trading strategy where your winning rate, it doesn't matter if you have low winning rate, or maybe your losing is higher than your winning. What matters is the amount you are losing and the amount you are winning, right? You might lose 10 trades and win 5 trades, but the amount you are losing and the amount you are winning is what matters. Just imagine you are losing just 20 pips, right? And you are winning from 60 pips and above, to the extent of 500 pips in a single trade. That is one of the best trading strategy, if you ask me, right? That is one of the best trading strategy. So what I'm going to do right now is I'm going to head straight to my desktop screen and I will show you how I traded gold yesterday, being Monday, the first day of the week, Monday the 4th of December 2023, so that you understand this powerful trading strategy that I am talking about, right? And for those of you that have not gotten my premium video, endeavor to get it, because this video has so many values. It is something that I normally use while trading, and it has been generating consistent profit for me. So the earlier you get it, the better for you. So if you watch, you see that the price surpassed the highest resistance level at the monthly time frame. This is the monthly time frame. So what I did is that I knew that the price is going to reverse from there, because this is a monthly time frame, right? So what happened is that price surpassed the 2100 level. This is it, the 2100 level. Look at the level where price got to. Price got to 2143. That is the good price. That is where the price got to before it started to retrace back. So what I did is that, remember that I bought gold when the price was still going up. So let's go to the lower time frame. Let's go to the 4-hour time frame. Remember that I normally trade using the 15-minute time frame, right? So that is the time frame that I normally use to trade. But whenever the price is ranging, I had to add up multiple time frame to confirm the directional movement of the market, right? That is when I include multiple time frame. But once the market is clearly in a trend, I focus on the 15-minute time frame. But when the market starts ranging, I include 4-hour, 1 hour, 30-minute time frame to confirm the directional movement of the market, and I trade in the direction of the market. So this was on Friday, 1st December 2023. So this was when the 5 EMA crossed above the 20 EMA on Friday around 3 o'clock p.m. So this was when I took my buy trade around here, and my stop loss was below here. So on Friday, I placed my buy trade after the 5 EMA crossed above the 20 EMA in the 15-minute time frame. So I placed my buy trade somewhere here after the crossover. So after the crossover happened, so the crossover happened here, right? So this is the price that caused the crossover, and I placed my buy trade somewhere here, and my stop loss was below here, right? And then what happened? The price now went up on Friday. So my first take profit, which was set at 60 pips, was triggered somewhere around here, and I had to hold on to my second take profit, because my rules is that I normally place 2 trades, right? The first take profit is going to be set at 60 pips, right? While the second take profit, I'm going to hold it until the 5 EMA cross below the 20 EMA again. That is when I can take my second take profit. So remember that what I'm risking is just 20 pips for the 2 trades that I'm placing, 20 pips. So I placed my buy trade somewhere here, and my stop loss was below the 20 EMA. Then what happened? The price rallied up and was unable to cross below the 20 EMA until the end of that Friday, right? So Friday was 1st December, right? So this was when Friday ended. This is 23. Okay, this is 23 o'clock. That is almost 11 p.m. So that was when Friday ended, right? And it was weekend. So I wanted to close my trade, but for the fact that analysts predicted that the price might go above 2,100 level, so what I did is I decided to hold on to my trade, right? So that in the next day, which so that on Monday, immediately the price open, I can take my trade or close my trade. So I just allowed my trade open to see what happens on Monday, right? Remember that I normally trail my stop loss, just like I told you. I normally follow the 20 moving average. So once the moving average is going, I will be trailing my stop loss alongside with it. Let's assume this is the point where the moving average is. I will count 20 pips from that point below and place my trailing stop loss, right? My trailing stop loss is my stop loss which I move to break even and then started to trail it, so that if the price goes against me, it will hit my trailing stop loss and I will still accumulate the profits that I had. I'll still go with that profit. I will not lose all my profits. So that was my plan, right? So what happened is that the price rallied up to this level. I was shocked when I woke up on Monday morning. To my greatest surprise, when I woke up on Monday morning, it was a great surprise to me that gold has already surpassed 2,100 level, and gold is at 2,140 level. So I saw the spark, right? If you watch this is a strong movement. I saw this spark, this movement just in 15 minutes. Price surpassed over how many pips? 100, 200, 300, 400, 500, 600 and 700 pips. Just one candlestick in a 15-minute time frame surpassed 700 pips. This candlestick alone, just this one candlestick you are seeing right now, this long green candlestick is 700 pips. Honestly, this is unimaginable. So when I saw this candlestick and I counted the pips, just one candlestick, 700 pips, I knew that this is news and the price will reverse, because I looked at the RSI and I discovered that the RSI is in overbought. That is almost, the overbought was too much. So I said no, it's better I take my profit, because the reverse is going to be mind-blowing, right? The earlier I take my profit, the better for me. So in this process, I refuse to wait for the 5 EMA to cross below the 20 EMA. And what I did that midnight was I took my profit immediately, right? So I closed my profit somewhere around here. This was where I closed my profit on Monday morning in the midnight. So I had to sleep. So when I woke up in the morning, the time I normally wake up, around 6 a.m. Nigerian time, I discovered that the price has already reversed, right? Because the seller stepped in after this long green candlestick, the sellers now step in because the price has reached the highest overbought condition, right? The price has reached the highest overbought condition for just one candlestick in a 15-minute time frame to surpass 700 pips. That tells you that the price has reached the highest overbought level, right? And it become ripe for sellers to step in. So that was when sellers now step into the market and decide to push the market with immediate effect. So they push the market all the way from this level, right? And the market rallied down. They push the market down 700 pips again, because from here to here is 700 pips. So they push the market down again. So when they push the market down, I was already sleeping because I've already taken my profit here. So if you calculate it, this was where I placed my buy trade, right? If you check the level, this was the level I placed my buy trade. This was the level I placed my buy trade. This was the level I placed my buy trade, right? And then my stop loss was somewhere here, just 20 pips, just 20 pips, just 20 pips somewhere. Okay, somewhere here was my stop loss, just 20 pips. Okay, so I took my buy trade here and my stop loss was below, something like this. So this was my buy trade and this was my stop loss. Now do the calculation. That was when I took my buy trade, 4 o'clock p.m. Nigerian time. That was when I took my buy trade and I had to hold on to my second take profit. That was when I took my profit. That was when the price has already rallied. Like I said, just from this point to this point is 700 pips. So that was where I took my profit. That was where I took my profit. So once I took my profit, I discovered that the sellers have already stepped in when I woke up in the morning. So I was waiting for a crossover, right? Because I want to be confirmed that the sellers have taken charge of the market. So what happened is this: the price now came here, crossed below the 20 EMA, rejected, but I was waiting for the 5 EMA, this blue line, to cross below for me to confirm that the crossover has happened. So this is where the crossover happened. So the crossover happened here. So I waited for the price to make a pullback to the 20 EMA for me to confirm my entry. So the crossover happened here and I waited for price to make a pullback to the 20 EMA for me to place my sell trade, and that was what happened. So the price made a pullback to the 20 EMA and immediately this candlestick, this green candlestick closed, I placed my sell trade. So I placed my sell trade here at the close of this green candlestick. I placed my sell trade and my stop loss was 20 pips above. My stop loss was 20 pips above 88, so my stop loss should be 90. Somewhere here was my stop loss. So I placed my stop loss above the 20 EMA, and what happened? The price began to rally down. So I placed my sell trade around 6:30 a.m. Nigerian time. That was when I placed my sell trade around 6:30 a.m. Nigerian time. Around 6:30 a.m. yesterday morning, that is Monday morning, that was when I placed my sell trade and I targeted just 20 pips as stop loss. Then I targeted my first take profits as usual, which is 60 pips, somewhere around here. This was where I took my first take profit, somewhere around here. I took my first take profit somewhere around here. So immediately I took my first take profit somewhere around here, I had to break even. So I took my stop loss to entry, and then the price started to rally. So what I did, I started to trend my stop loss following this 20 EMA. So I was trailing my stop loss following this 20 EMA, right? And if you watch, you see that the price could not break above the 20 EMA. Whenever price gets to the 20 EMA, it reverses from there. Whenever price gets to 20 EMA, it reverses from there. So this was how I was holding onto my second trade until the end of that Monday, right? Look at it till the midnight, right? So the price could not cross above the 20 EMA. the price could not cross above the 20 EMA. So what I did is I had to close my trade at 20 o'clock, somewhere here. This was where I closed my trade. So I closed my trade here because it's already midnight. So I closed my trade here, right? So do the calculation and tell me how many pips that I accumulated. This was where I placed my sell trade. This was where I placed my sell trade at 20.88, right? And this was where I took my second take profit at 20.32. So I accumulated over 500 pips yesterday, because if you calculated it, this was where I entered. I entered at 20.32 and I took my profit at 21.32. So if you do the calculation, you see that this is more than 1,000 pips, right? On Friday I made more than 1,000 pips on Friday. Why on Monday I made more than 500 pips, right? So after that, the price now decided to range, right? The price now decided to range. So immediately I took my take profit here, I closed for the day, right? So that was how I made 500 pips yesterday, being Monday, and I made over 1,000 pips on Friday. So the price now had to range. So that was how I made 500 pips yesterday, being Monday, while trading using the moving average crossover. So you can see clear with me that the moving average crossover is a powerful trading strategy as long as you know how to use it very well. The most important thing in this strategy is that you need to have a better money management skills, right? You risk less because you're going to lose. But the sweetest part of it is that you're winning. Whenever you win, the winning is going to surpass your loss. Even if you lose 10 times, just 2 winning or 3 winning can cover the losses, right? So that is the power of this trading strategy. The risk reward ratio is too high. So that is why it's always advisable for you to trade in the direction of the trend. Imagine that I'm trading against the trend. Just imagine I'm trading against the trend. I would have lost so much. But for the fact that I'm trading in the direction of the trend, so that is how I was able to accumulate all this profit. So ladies and gentlemen, that is all I have for you on today's video. If you love this video, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this. And also, don't forget to share this video on your social media handle. Turn on the notification icon to be notified whenever I update new content. I will see you again in my next update. Bye.